What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be talking about why insurance is getting absolutely ridiculous. Now, over the last few years, you've noticed that your policy have gone up quite a bit. Unfortunately, I'm in the state of Nevada. I live in Las Vegas, and we got hit with the highest 59% increase out of the entire United States. Now, I'm going to go over what I was currently paying when I first bought my Audi R8 and currently what I'm paying now and what my new quote was on my beautiful smart car. Now, before I get into the video, I'd love for you guys to chime in. How is the insurance in your current area? Is it going up? Is it gone down? Has it doubled? Has it tripled? I'd love to know. The more we share on this channel, the more we can kind of help each other out and find out what our current market is. Now, like I said, I currently live in Las Vegas, Nevada, which is the worst state currently right now besides California. Now, California does have some laws that prevent insurance from getting too high. So what insurance companies are doing to combat that is they're actually leaving the state of California. So if you're currently in California and you have an auto policy, make sure to check to see if they're going to renew it, because there are a lot of people out there that are finding out that their insurance is not being renewed. I just talked to an individual yesterday, and his insurance on his F-150 was about $150 a month for full coverage. Today, he's sitting somewhere around $375 a month, and he's about 60 years old. So insurance is definitely jumping up. Now, first I'm going to start off with my smart car. Now, if you guys don't know what a smart car is, it is a little tiny two-door car. I have one right now that's lifted. I put a turbo on it, did all this crazy stuff, but I wanted to get just basic liability insurance on it. So when I first added it to my policy, they wanted to charge me $270 a month. At that first, I thought maybe it was full coverage with some roadside assistance, everything else. But come to find out, after talking to Progressive, they're charging me $270 a month for liability only. Now, I purchased this car for $1,500. Even after lifting it, putting a turbo kit on it, doing all that crazy stuff, the car's still worth under $10,000. So after talking to my insurance company and everything else, they agreed to drop my insurance to $220 a month for liability. Now, I thought the problem must have been Progressive, so I called multiple companies. I'm prior military, so I called USAA, I called Liberty Mutual, I called a bunch of insurance companies, and all of them were the same price. I remember paying $200 a month, $225 for a twin turbo Porsche full coverage back in 2013. I don't know why my little go-kart, my smart car, cost $220 a month for liability. Now, my new G6x6, even though it's sitting in my shop and we're chopping it up for the channel, this actually is not that bad. With a $250,000 coverage policy, it's cost me about $500 a month. I mean, it's massive, it's 9,000 pounds, it's a big truck. So I figured this would be a little bit higher, but actually wasn't that bad. Now let's go ahead and move on to my Audi R8. Now my Audi R8 I purchased back in the end of, I believe, 2021, beginning of 2022, and I was paying somewhere around about $287 a month for full coverage with roadside assistance. Well, my policy winded up renewing about a year ago, and it jumped all the way up to $575, close to $600. So I raised my deductible, brought it back down to like $5 something. As of this year, it just renewed again. And now it is $1,057. Now, I made a video a while back and I actually called Progressive and complained. I've never had any accidents. I have no speeding tickets. I have absolutely nothing. And when I asked them, why did my insurance go up so much? They basically hit me with a big, oh, well, that's just the matrix that just says this is what your policy is due to the area you live in and the car you're driving, which I thought was absolute BS. And at that point, I decided to go do some research on my own so this way I can share it on the channel. Now, after talking to numerous insurance companies as well as brokers and adjusters, I figured out some of the reasons why car insurance has gotten so ridiculous and so out of hand. Now, if you purchased a car about 2 years ago, let's say you had a 2015 Toyota Corolla. Now that car was worth about $10,000 2.5, 3 years ago. But all of a sudden during the pandemic, remember that shortage caused cars to go up in value. So for that whole time, your premium may have been, let's say, a flat $100 a month to cover you for that $10,000 car. Well, anyways, after a few years, you crashed that car during the pandemic. Now they got to pay you maybe $16,000 on that car. So a significant amount more than what you currently were paying. So what happens? Since they had to pay you that bigger dollar amount, they had to raise the premiums. Now, if you times that over millions of cars over the last 3 years, you can start to see the snowball effect of people basically paying more money for the cars that they're currently driving now. So even though your car is technically the same car and you haven't had any accidents, they're raising your premium because the car is worth more than when you bought it maybe 3 or 4 years ago. Another thing that's gone up quite a bit after talking to some of the adjusters is the cost for actual repair. Now, during the pandemic, we hit a lot of shortages where there were no parts for these manufacturers to get so they could fix these insurance cars. So what the insurance companies did was total out a lot of them. So this way they didn't have to worry about waiting for parts and making people wait. That was another thing that raised prices and premiums up. Also, during the pandemic, parts and auto repair went up 67%. Which is absolutely insane. So now you have more higher wages, you have more expensive parts being on top of your regular repair bill. Now, as these numbers start to creep up, insurance companies tend to look at what their losses are and everything else, and that's how they adjust their premiums every year to 2 years. Well, unfortunately, as you can see, as everything started to curve up, your insurance is about a year to 2 years behind. So we're starting to see all these crazy hikes the last year and a half to 2 years because they're catching up to where the pandemic is. Now, good news is it will go back down, but we have to wait for the prices and the affordability of everything to actually start to go back down. Now, unfortunately, due to these up and down natures when it comes to the actual value of what it costs to fix your car, this is another reason why it's putting constant pressure on the insurance companies to raise their premiums. Now, I know a lot of people are very upset. They've been driving the same car and they're paying double, if not triple, like myself. But there's also a very big culprit that people haven't been talking about, and that is actual EVs. Now, you may be asking yourself, why does EVs have anything to do with skyrocketing insurance? Well, unfortunately, it is very easy to total one of these electric vehicles. Now, every car has a certain standard that needs to be fixed or repaired or parts to be replaced. So if, let's say, you smack a truck in the rear bed and you dent the quarter panel, most times they will actually make you replace the whole quarter panel instead of just fixing that small dent. That is what's called an insurance quality repair, and that's the standard that they have. If the car is newer, they tend to do that more. If the car is older, then they'll maybe fix it or let you use used parts. Now, the downfall with electric cars is everything is basically an insurance repair nightmare where it comes to parts like the new Rivian. The Rivian truck, if you smack it in the very rear quarter panel, the whole quarter panel is the whole side of the truck, and it's $30,000 to $40,000 to fix that panel. So right from the get-go, you get a small fender bender in your rear quarter, and they will total out your whole truck. If you happen to bump a battery, like let's say you smack a Tesla from the side, if there's a little bit of damage on the under tray, they will total out the car. Anything that could risk or jeopardize your battery. And so now you're running into all these EVs that have major problems if you do any type of damage work, especially when it comes to electrical. Now, typically when you get into an accident and let's say there's some electrical damage, most cars will have fusible links and some of the systems are a little bit further apart. A lot of with these EVs, a lot of that stuff is part of the entire system. So if one thing fails, they don't require you to basically cut out a section and replace it. They want you to replace the whole entire thing. So replacing a lot of these electrical systems costs tons of money because you have to tear the whole car apart to get to these things. And that's another additional cost that they have to do as an insurance quality repair on your EVs. Now, another reason why insurance is getting very expensive is obviously, SUVs and trucks are the most popular cars in the United States, but unfortunately they cause the most damage when it comes to hitting other things. So as more Americans start to drive these bigger, heavier SUVs and trucks, all these smaller cars, Honda Civics, Ford Focuses, every time they get hit, that's more damage that they have to impact. And usually when one of these trucks get out of control and they hit a car, they don't take out that one car, they usually take out quite a few. So just imagine a wrecking ball on wheels, and that's what most trucks and SUVs are. So as we go further on, you're starting to see more and more trucks and SUVs involved in more horrific accidents. And then on top of that, when they hit buildings, telephone poles, stuff like that, they do much more substantial damage compared to just a regular economy car. So these are one of the other factors that's raising up insurance rates. Now, another thing that's hurting people, especially in Nevada and a few other states, are the frivolous lawsuits. Now, don't get me wrong. I know you can get hurt in a car accident. So if you've been hurt and you had to sue to make sure that you were covered, I totally understand that. But there's friends of mine, I even know them, they're attorneys here in Vegas, that literally anybody that's in a fender bender, it could be 2 miles an hour, they will get you a $10,000 to $20,000 check guaranteed. And so keep adding on all these additional costs of doing all this. And I remember talking to some of my attorney friends, they will spend sometimes 6 months to 2 years chasing $20,000. Now, even though they're going to get a $20,000 payout, they cost the insurance company thousands of dollars through litigation. They force their clients to go through rehab and chiropractic and all that stuff the insurance companies have to pay for. And so little by little, more of these things are adding up and it's causing more on the bottom line. Now, I think there should be a threshold. If you're actually hurt or injured during an accident, I think you should be covered. Now, Nevada is one of the few states that you can actually sue your own insurance company. And I know people that do this. If they get into an accident, even if they crash their own car into a ditch, they will sue themselves to get some sort of compensation or free money from the insurance company. And this is the way the mentality is starting to get to. Now, one of the other things that I didn't really think about that's now coming in the fold is the fact that banks are taking major losses when it comes to their cars being repoed. What about the insurance companies that have to pay major payouts when the car is not worth what it used to be? Now, a lot of people bought brand new cars during the pandemic, and some of them added gap or special coverage for their brand new car when they purchased it. Now, what this means is the insurance company will pay whatever the amount is that you actually owe. So if the car is worth, let's say, $50,000, but you owe $75,000, the gap insurance will take care of that and they will fill in that gap and pay that $25,000 difference. Where traditionally this is a very small amount for very few cars. But as we go into this 2024 season, you're going to start to see more and more people owe way more than what their cars are actually worth. And so what's happening now is the insurance companies have to eat this. Now, a lot of people are realizing that they can't get out of their current car loans or they can't refinance them or trade them in because they're so upside down. So what's the next logical thing? Insurance fraud. People are out there crashing their cars and smashing them into brick walls and doing all this crazy stuff just so they don't have to pay the $10,000 to $20,000 to $30,000 of upside down balance of what they actually owe on the vehicle to get a new car. It's easier and quicker for them to actually crash this thing into a wall and collect the insurance money. And so normally, like I said, this is not a really big thing, but now we're seeing, thousands and thousands of dollars on every single policy, even regular cars. I talked to an insurance adjuster that worked for a major insurance company, and he was telling me that he's actually authorized to spend more money to fix cars because usually they have about a 60-70% threshold, that they're going over that because so many people are upside down in their cars. They don't want to go too high because if they total them out, the customer has to pay the balance out of their pocket. So they're spending more money fixing these cars to help people stay in their cars so they can make the payments. That's how crazy it's getting. So we have insurance fraud. We have insurance companies offering more money to fix cars so they don't have to eat the big balance. And this is what's currently going on. And this is why our insurance is getting absolutely out of hand. Now, in the next 6 months, I believe it's going to calm down a little bit because hopefully that 1 to 2 year cycle where vehicle values are going down, people owe less money, and we'll start to get maybe a little bit better affordable rates. But as of 2024, they're saying supposedly that nothing is going to change, that it's going to remain the same way it is until the end of the year. But I'm remaining hopeful for 6 months. But I would love to know your opinion on what you currently think of the insurance market. Is your insurance doubled or tripled like mine? If so, what city and state? What kind of car do you drive? I understand that I drive an exotic car and my insurance is going to be expensive. But when they hit me for $225 for a smart car, I almost had a heart attack. And they even valued the car, I think, like at $5,000. So it's not like I'm having insurance for a big dollar amount. But I would love to know what you're currently paying and how much this has gone up by. Also, if you have any questions, feel free to hit me in the message below. I try to answer every single one. I will be in California. We're going to the Motor Trends Hot Rod Power Tour. So I'll be in LA tomorrow. So if you're in the area, come say hi. But I would love to thank you guys so much for watching. Follow us on Instagram at Lucky Lopez, and we'll see you next video.